Welcome to Looking at the Markets with David Modell. Today we have a return guest, one of my most frequent guests. He is Mr. Seth Golden from Golden Capital Portfolio. He is also a frequent article writer and contributor to TalkMarkets.com, SeekingAlpha.com, among others. He is a frequent tweeter and stock twitterer, if that's a word. I just made that up. Okay. And we'll be talking more about that. And he's been getting some massive attention due to his volatility trading strategies. So we're going to talk all about that. First of all, Mr. Seth Golden, thank you for joining me once again on Looking at the Markets.
Thank you for having me, David. It's always a pleasure to join you here. Every time I come on, I'm always trying to, reach new investors and new traders, and just kind of give them another, an alternative strategy or something that they may be able to latch on to that has worked for me for a number of years now. Yeah,
and generously you have been doing that, as well as tweeting many of your trades on StockTwits on Twitter, and look in the description for those handles. So let's talk about, first of all, you were recently featured in a New York Times article on August 28th. The name of the article was "Day Trading in Wall Street's Complex Fear Gauge Proliferates." This was written by Mr. Landon Thomas Jr. Now, since that time, you've been featured or mentioned in, among others, Business Insider, Zero Hedge, The Reformed Broker, so many places. You're all over the place now. So I wanted to be the first, or one of the first, to get your reaction to all this attention, and specifically to the New York Times article.
Okay, yeah. It's not something that I expected. It's not something that I, went after. But when I, was contacted by the reporter, I thought he had a genuine interest in kind of discussing volatility, how, the volatility trade has proliferated over, the last number of years, and it has really gained momentum in 2017. So it was an interesting process that, going through the questions and answers, every few days. And, I would say that the end product, the article, really gave folks a good understanding of why it's such a hot button topic right now, because you have, kind of a dichotomy of perspectives. Yeah, on one side, you have those that think, if you're shorting volatility, eventually your account, is going to blow up, if we have some kind of, catastrophe in the market. And then on the other hand, you have, folks like myself who understand the nature of volatility, understand these products very well, and we exercise a good deal of risk management. We're not just, short the VIX because it'll go down and that's all. No, I mean, I've been doing this a number of years. I understand the ebbs and flows of the market and how these instruments work, alongside the market. So there's a great deal of risk management. So, the New York Times article basically gave me, an additional platform to reach more people, give a little bit more color, to what the Times article, was discussing, so that I can, dialogue one-on-one with people, so far as, how to, take risk off the table, how to add risk during certain times, and engage what the market is doing. So I thought it was a great experience. I thought the reporter was genuine in his, what he wanted to get across to his readership.
Absolutely. And just to be clear and give a little bit of background on what you do, both for your own portfolio and for the Golden Capital Portfolio clients, whose money that you that you oversee and do such an amazing job with and get such great results for. You specialize, among other things, in shorting VIX products, exchange-traded products, such as UVXY TVIX VXX. I know that your favorite, I think, is UVXY.
Yes.
You short that not whenever, but sometimes you'll short it when the VIX, the CBOE volatility index, spikes a lot.
Right.
Because not only does the market tend to calm down at some point afterwards, after the volatility or fear spike takes hold of the market tends
Right.
to calm down. But also, these are products like UVXY TVIX VXX. They have a natural built-in decay to them. So
Right.
even if volatility or fear stays in the market for a while, in the U.S. equities markets for a while, these products are so, I don't want to say poorly constructed, but they have such a natural decay to them. They're poorly constructed for longs, okay, for people who buy and
Yeah.
hold them, that they're going to deteriorate anyway over time. And so
Right.
you've made quite a lot of money doing this. If I could just ask really quickly, what kind of
Sure.
results does the Golden Capital portfolio have year to date in 2017?
Well, year to date, we're already tripled, well into the triple digits. The last several years have been triple digits as well. And I understand that a lot of people look at that and that's not possible, or they're just very skeptical, which is perfectly acceptable. I understand that. But if you look at the decay, the average annual decay on these instruments, I mean, it's 90%. And the other thing is nothing goes down in a straight line, nothing goes up in a straight line. So there's periods where you can, layer additional positions, take off positions, take profits, cover some shorts, and then it goes up and layer that same money on top of it, basically just compounding, the profits. So, I understand, some people are skeptical, that those kind of returns are achievable, in the market, and, especially using instruments from the short side. But there are many people out there doing this. I wish there was more. I wish there was more that can speak to it eloquently. But at the same time, not a lot of people want to discuss, this trade openly because, well, you see what happens. A big hedge fund comes out and says, well, we're short Tesla, or we're short Herbalife. And, somebody says, oh, yeah, well, we're taking the other side of the trade. And then it just, your trade gets watered down regardless of how sound your thesis is. So there's not a lot of people out there discussing it, let alone, detailing the strategy. And, that's what I've done over the last couple of years is kind of open, it's not Pandora's box, but open the door and show people through, many, many articles, what I'm doing, how I'm doing it, why I'm doing it, in a lot of sense, with social media nowadays, you can, do a trade in real time and just copy it and tweet it out, and that plays very well. People can see what you're doing in real time. So, it is a difficult concept to understand that, you can hold a short instrument long term and make a lot of money,
But you're doing it, and you're doing it consistently, and I believe you're doing it safely, reasonably safely, because you have those safety measures in place, and we'll talk more about that. But first,
Okay.
I wanted to finish up with the media coverage. Most of it's been really good, and I know that people have been really positive. I've seen the responses to you on StockTwits, on Twitter, in the media. People love what you do, and they want to learn more about it. But, of course, you're going to get some people who may not fully understand what it is that you do. So how has the response been overall from various media sources?
Overall, it's been good. I think that the reviews of the New York Times article, or the summations, like by Business Insider and some other organizations, IB, they did a whole podcast on it. IB, the trading platform, but then there's others, that basically brush it off, and eventually, I think the gentleman from CNBC, Josh Brown, who he's one of my favorite on CNBC on the Fast Money show. He extrapolated a blurb from the New York Times article, and basically he said, I hope your portfolio is in order. I'll let you know when my mom decides to start shorting volatility. It was tongue in cheek, which is fine. But then there's been a couple which have kind of blew my mind. The level of disconcerting. One recently decided, instead of talking about what the New York Times talked about, which was volatility, how to trade it, who's trading it, and why it's a hot button issue, they decided to take personal stabs at me and my life. I trade, I'm a trader, I invest, I'm an investor, I help other people invest, and I share with them my trade alerts and everything so they can manage it right on their own platform at home. They're their own fiduciary. I'm simply there with them on Skype, or what have you, working with them, side by side throughout the day. This person asked me, Seth, if you made so much money, why did you have a lien against your property? I was a little bit taken aback by that, but because I didn't expect such a question in an interview, I answered it, which was my homeowners association was misappropriating the funds, and I wasn't going to pay my dues. And a number of other, residents in the community, it's a gated community, we pay a lot of money. We wanted that management out of the homeowners association. So they placed a lien on the homeowners that didn't pay their dues. We eventually got that management team out of there, and of course we paid the dues thereafter, but we had no trust in the homeowners association management, so we didn't do that. And then he took it a step further to talk about one of my partners for a number of years. And, while I didn't answer his question because I didn't feel like I had the permission to from my partner, he basically said, so your partner's a convicted felon. And, I just, I was like, what? I thought we were going to talk about the VIX and, what I do and how I, but when he said that, I decided to jump off the call because this was not about helping people. This was about, possibly, damaging me as a person. And I'll be the first to admit, I am not perfect. I don't think anybody is, but I do my best to, disseminate information and help others in their trading, and make a long story short with my partner. And the reporter wasn't wrong about, what he uncovered, if you will, except he's not a convicted felon. We lived in Miami, or at the time, a couple years ago, and him and his girlfriend went to the Miami Airlines to see a basketball game, parked in the parking garage, because you have to down there. They came out of the game that night, went to have drinks and dinner, and when they went back to the parking garage, it was early the next morning, like 1, 2 in the morning, and they go to drive out, and the mechanical arm doesn't lift up. There's no attendant there either. He's got 2 options, which is basically sleep in the car. His girlfriend, they have to sleep in the car overnight, or they got to get the arm up. They chose to get the arm up, and they had sensors on it, and the cops show up, and, they take them away, and the owner of the garage dropped all the charges, and it, it's just a misdemeanor, but it takes time for that to get expunged off your record. But that's what this interviewer presented me with.
Right.
And, I was just really taken aback by, so that was I would say the worst of this experience, and just kind of the media, that was the worst one. And I expect, that'll probably be published somewhere, but I encourage, people who read and have followed me for a while, I have like 400 or 500 publications. I've done very well, and it's all out there in the open. Right. You can go read it on Seeking Alpha. You can go read it on TalkMarkets.com. I'm hoping to establish a hedge fund, by the end of the year. That was also something that he jumbled up in the interview. We don't have that established yet. Yeah. We're looking to. So, we don't have all the registration approval. We don't have all the regulatory approval yet. And he decided to develop something that will confuse some people. And I get that. And I'm all for good, in-depth reporting. I think this was, missed the mark a bit, and we'll see what the reaction is either way.
Well, I have no doubt that your transparency is not in question. I know that people know that everything you do is above board. You've been nothing but honest, You're tweeting free of charge. You're tweeting your trades on Twitter and StockTwits.
And StockTwits, yeah. For on StockTwits I've only been there for a year, but on Twitter much longer.
Yeah.
And there's my publications, which are since 2012.
And Seeking Alpha, you're publishing your strategies on Seeking Alpha, TalkMarkets.com, so on and so forth. You don't have to do those things. You do those things because you want to.
I don't get paid to do those things.
Yeah.
I'm not making any money doing those things. Yeah. I don't care to. Right. I have engaged a lot of really good people in the last year, through becoming a little bit more public, if you will.
Right.
And I think the New York Times kind of hit a peak for me.
Yeah.
And I like to tell people, I can take a good punch. I had a really rough upbringing. I lost my father. My mom left when I was a kid. I had to raise basically my brother and sister, and then I lose my father at 22. And I got to raise a 15-year-old girl, which is why I didn't want a daughter in the first. But I love my daughter. Everybody knows I love my daughter. But it's hard to raise a girl. And my brother, who was just finished, he graduated high school and didn't really have a clear direction. And I'm 22 years old, trying to raise these two kids. And I'm proud to say that they've come a long way. I don't mean to get on a tangent here, but that's what you get with Seth. You get somebody who's maybe a little bit too open, and I have to take it as it comes.
Yeah. And we appreciate your generosity in providing the knowledge to the people. You don't have to, you just want to. That's who you are, and I appreciate that. Sure. And what I did was I took the liberty of summarizing some of the the haters, what they have to say. Okay. Hey, you know what? You have not arrived until you have some haters. So congratulations.
Yeah.
Okay.
True.
or critics, if you want to call them that.
Yeah.
I think that the critiques of your methodologies of shorting VIX products can be summarized in, I found five general critiques. All right, so critique number one: equities are obscenely overpriced, and the current bull market is quite old. One of these days, you're going to short UVXY and the whole house of cards will come crashing down, and then you'll be completely screwed. What do you say to that?
Okay. So I've been doing this for a number of years. So, what I can say is I'm not just, today's another day. I don't care what the price is of UVXY. I'm shorting more. It's not how it works. I am a very good student of the economy, of finance, economics, corporate earnings. And what I've come to understand over the years, and it's one thing that holds true over the decades, is that the market follows earnings. And I think I've said this, before, and I write it in my articles. The market follows earnings. We can say that they're overvalued, and historically they are, not by a landslide. We may be 2.2% above the S&P 500 historical average. That's not a landslide. And here we are coming out of the year. We're in the back half. We're almost in the final quarter of the year. So if they are going to be, pricey, it's going to happen in the back half of the year. That's when it tends to. So far as managing, the risk, eventually it'll blow up. I was doing this strategy of shorting volatility, VIX leveraged instruments in August 2015. And what I can say is it was a fantastic learning experience. This isn't for everybody. I don't promote this strategy as much as I educate the strategy that I use. Right. And what I learned from that time is, as long as I have enough liquidity and I understand, where this period of volatility could possibly end, I will be okay. And it went up almost over 250% against my positions. And I said it before, it's not fun. It's definitely not for everybody. A lot of people just cut their losses, and that's an option. That's always an option. Sometimes people when they say these salacious, things, It's like they don't think we have a button that we can press and just get out, you know. Right. We're just going to get wiped out. There's no way we can actually get out of the position. You know, my hands are you know, that's not the case. But I managed my risk very well through that event. And, you know, it only lasted for five and a half weeks. And, you know, when I go back and I look at the history of the VIX, and this is where it comes to, you know, understanding how the VIX works, the fear, it can only sustain itself for so long. I mean, I've gone all the way back to 1991, and there's not really any such thing as a trending higher, you know, VIX. Right. It just has momentary spikes. Those moments can last, you know, a few months, but as long as you have the liquidity and are managing through that time, you'll do very well. Yeah. You know, even if a lot of people say, well, 2002, 2007, 2008, you would have been wiped out. The market was going down pretty well in 2007 already before, you know, the 2008, you know, developed really bad. And that's where it comes down to, again, corporate earnings. You saw corporate earnings were negative, you know, in the back half of 2007 and the first half of 2008. You had an opportunity to de-risk. If you're a VIX leveraged trader, that's what you look at. And you say, I need to de-risk, because if the market follows corporate earnings, we're probably in time, you know, in going into a period where the markets are going to contract, volatility is going to edge higher. Gotcha. De-risk. Maybe I don't do 20% of my portfolio to VIX leverage instruments. Maybe I only do 10. And maybe I've also been doing this long enough and been practicing a strategy whereby if we go into a bear market scenario and volatility is edged higher and stays at a higher median, maybe I'll actually have a mix of a long and a short, you know, type of strategy. And that's the benefit of actually doing this and being dedicated to it for so long. If anybody is going to know when to go long and how to actually implement a long volatility strategy, even if it's only, you know, moments here and moments there, it's the people that have been short and understand it, you know, for some time now, in my opinion.
Sure. Makes sense to me. All right, critique number 2. I have horrible self-esteem, and your returns have been so amazing that I just refuse to accept that it's possible to achieve those kinds of returns. What do you say to somebody with that kind of criticism?
I would say don't, you know, place your personal experience onto my person or somebody else. You know, everybody has their level of expertise. This is my, you know, level of expertise. You know, I invest in what I know, and I always have. I don't understand Qualcomm. I don't understand Tesla. I can't get the valuation of Tesla. I don't understand the value of Facebook. I invested in it because it's just a great momentum and it's just stayed up for so long. But I don't invest necessarily in what I don't know. I don't know, you know, biotechs, so I don't invest in them. I know volatility. I know consumer goods. And I know the retail space. That's what I invest in. If you're truly proficient in a, you know, base of knowledge, you should actually be able to do very well, especially if you allow that base of knowledge to, you know, gain experience with time. But when it specifically comes to my strategy and using these VIX leveraged DTPs, the decay is real. You go to any one of these charts, the charts aren't lying to you. Why should I be lying to you? Right. You know, just because maybe you haven't experienced it personally, and there's a fear factor in shorting, I understand that, you know, doesn't mean that other people aren't really seeing these outsized returns. And to that point, the New York Times wouldn't be writing about it. Right. You know, I mean, they understand the returns of these instruments have, you know, beaten the market by multiples over the last several years. And that's what they're trying to get a, you know, insight, you know, as to how these instruments work and how they can actually work long term and people can benefit from them. I wrote a 2-part series in 2016 for Seeking Alpha. It's called The Greatest Trade of the Decade, Part 1 and Part 2. So this is something I've been talking about, you know, for years now. I mean, you can go back and read what I've written. You know, there's no point on me writing these things if I don't truly believe in them and don't truly, you know, adhere to, you know, that strategy. Yeah. And the instruments have done exactly what, you know, they're designed to do per se. You know, maybe that's not the right word, but, you know, it's a volatility. You know, the implied volatility is rarely, you know, higher than, you know, front month contracts and whatnot, because people genuinely are optimistic. So, you know, they have hope, and that is mirrored in implied volatility.
Sure.
That's what these things are, you know, structured against.
Yep. And also, people can follow your trades. They can
your trades. It's right there. I'm sorry to interrupt you, David,
okay.
but, you know, just this week alone, I've had a couple of trades that I posted out there in real time. People are free to, you know, use them, don't use them. It's really up to them, but it's all there. Yep. It's just all there.
So anybody who doubts your returns can see your trades. They can see them in almost real time. So I don't get that criticism at all. Critique number 3. In past years, VIX spikes above 20 were not uncommon.
Right.
Lately, however, we rarely see the VIX anywhere near 20. It just seems like slim pickings for the short volatility trade. What do you say to that?
Yeah, I guess I'll take it from, you know, that can be looked at in 2 different ways, because, okay, so it's not spiking dramatic like in August 2015, that just massive spike where if you had layered short positions into that, coming down, I mean, you just made a ton of money, because, you know, it was just a free fall over the next 6 months into 2016. It's a free fall. But nowadays, like the question says, the spikes aren't as high. And because of, you know, you could say we haven't had a 5% correction in forever, you know, it is kind of hard to layer as many positions into these medium-sized spikes as I would like to. You know, I don't have the greatest confidence that this particular spike isn't going to be the one that stimulates a 5% correction and in a you know, more prolonged spike. So from that perspective, yeah, it hasn't, you haven't been able to increase your exposure on the short side to the degree that you had in the past. Yeah, definitely. But at the same time, any additional exposure is compounding ROIC every year.
Right.
So, you know, that's why I do a lot of scalping. I do a lot of scalp trades because I'm not quite sure. This could go, you know, a lot higher or maybe not. But I can kind of tell, you know, from where we are, what hour of the day is and things like that. This is probably a good time to, you know, enter my short position, and maybe in the next hour or two, you know, I get a 50 cent to a dollar move on 1,500, 3,000 shares, whatever. That's a nice, you know, nice day trade, a nice scalp.
So there's still money to be made.
Yes, absolutely.
Yeah, that's the point. Critique number 4. If this strategy is so great, why isn't everyone doing it?
There is a lot of fear. You know, we're talking about being short, and, you know, the issue a lot of people have with being short is if it can go against you infinitely. You know, it can technically blow up your account if your hands are behind, you know. We don't have to go there again. But, you know, so there's a big fear aspect there. And then even if it doesn't, you know, wipe out your account, I mean, I've been through a period in August 2015 where the drawdown, you know, was quite significant in the portfolio. And some people can't stomach that. You know, it really takes a belief system, you know, a belief in the products, a belief in yourself, understanding the economy, understanding the business cycle. Where are we with corporate earnings? So, you know, it takes, you know, a lot of expertise, I would say, to feel confident in using this strategy, which is, again, I fully understood, you know, a while ago that not a lot of people have that confidence. Right. So someone such as myself, I'm not perfect, but someone with a track record, someone as myself, and is willing to show you the trades as they're happening, helps people feel a little bit more confident, and actually influences them to do the due diligence and start learning the strategy. I can't tell you how many times people have said, Seth, I've read your work. I see what you're doing. I really like it. Can I ask you a question about XYZ? 100%. I don't think I've ever not gotten back to somebody that has, reached out to me. Right. And, so I see that. I see that it's not just me talking, but it's people, answering me back, learning as they go, and, appreciating these instruments for their potential. And, I always, in my articles, in these conversations, number one priority is liquidity. If you can establish a discipline whereby you maintain liquidity, you don't try to hit home runs, maybe you hit a lot of singles. I hit a lot of singles on Twitter. Right. And, every now and then I get a double, but everybody's coming home. Yep. Everybody's going to round the bases. All my trades round the bases if I give it time, and that time is produced through liquidity. Right.
So I would say, just to add to that, not everybody makes this trade because not everybody has the emotional wherewithal to withstand the tough times.
Yes.
And not everybody has the capital also. I mean, the way you do it, you probably...
you have to have a margin account, So, I mean, if you have less than 25,000, you're not going to really be able to benefit from this strategy and opportunity. And it's probably not optimal for you, but at the same time, I offer a lot of great work on the retailers and CPG companies, and that has proven over the years to be invaluable for people as well.
Absolutely. And finally, critique number 5, I find it hard to believe that anybody would create a financial product that is designed to decay. What is your response to that?
Yeah, the word decay, and I know I used that word as well, design, but it's the correlations. The correlations are to futures, VIX futures, and that produces an implied volatility. And nobody wakes up tomorrow morning thinking today's going to be a disaster, and nobody's hoping for that tomorrow. So we're just the fear, the VIX index itself is supposed to gauge fear. But, more often than not, people are optimistic, and that's how they participate in the markets. And these instruments are constructed so they correlate with that. They correlate with that optimism. I know we say the VIX index is a fear gauge, but it expresses more optimism than it ever expresses fear. That's why the VIX has, been so complacent for so long now, because it's optimism. So I wouldn't say they're, designed to decay. It's the correlations that create that, unnatural status, homeostasis, if you will.
Right. Okay, so kind of like when you buy tires for your car, they're not designed to decay, but they do.
Right. They do. Yeah, they just do, because they're driving on the road for however 100,000 miles they're going to be driving. So yeah, that's a great example, David.
Well, sometimes I get lucky with my analogies.
There's diamonds every now and then.
I've been speaking with Mr. Seth Golden. I just want to give out your information. You're on Twitter, handle at SethCL, and these are all in the description of the video. You're on StockTwits at Seth Marcus. And if people want to contact you by email, maybe they have an interest in the Golden Capital portfolio, maybe they want to get those kinds of returns you've been getting for your clients. If you have a sizable account, then this could be perfect for you. Your email address is seth.golden@coolinxit.com, COOLINXIT.com. That's all in the description. In case I said it too fast, just check that out. And is there anything else you want to say about all this attention you've been getting, or just something you want to say to all the people out there? Because I find this fascinating. So is there anything you want to add?
Yeah, so we're hoping to launch a new hedge fund, in hopefully December. But regulatory and registration processes are really tough. So we have to jump through those hoops and everything. So we're not taking capital from customers, if you will. At this time, we're basically just gauging the response of the community, and it has been a very good response. I have to say there are a lot of folks that are interested in the potential of this fund, but at the same time, if it doesn't happen this year and it gets pushed off to next year, we are also working on a website that we plan to launch, which is a much easier operation. I ran a subscription-based website in the past, to the everyday investor's benefit, and we think that for sure is something that people are going to really appreciate. Like Twitter, you'll be able to see all the trades. You'll have news and information. You'll have my analysis and reporting. On all the sectors that I cover. We'll have a chat room. Just kind of like StockTwits has, and where people can engage and talk specifically, about volatility, consumer, etc. So I'm actually really excited about those opportunities for all kinds of investors. But to be clear, if investors want to reach out to me, they have my email. We're not taking any capital at this time. We have to get all of our approvals. But we'd love to gauge interest. I'm not soliciting, but if you want to have a dialogue about these strategies, and I've had many dialogues over the last week or so since the Times report. And what I try to express to people, because there's some people that should not be doing this. Like you said, if you don't have the enough capital to implement this strategy, I'd certainly be willing to talk to you about any investment you're looking at, if it's within my expertise. And those are a lot of conversations that I was able to have from that New York Times piece. And oddly enough, I get a kind of a interesting email today with a job opportunity for a very huge financial institution that everybody knows. And it's it's largely because they've been following me for a number of years. It's a dialogue that we've had somewhat, but there's never been actual offer made to me so far as working for this institution. So a little bit excited about that too, and I have to weigh these factors. I don't want to I'm sorry if that comes off as braggadocious, but I really do hope that investors feel that I'm somebody they can talk to, engage with on Twitter. You're going to hear some bad things about me. You're going to hear some good things about me. Of course. Come to me, Yeah. Come to me. I'll tell you like it is. I'm not perfect. I didn't pay my homeowners association fees. And, my business partner, for a number of years, he's a fantastic guy, fell into a situation where he had to get out of. But, I'll be perfectly honest with people and see where the chips fall.
Get in touch with Mr. Seth Golden.
Go Broncos.
Yeah, there you go.
NFL. Football season coming.
Right on. Get in touch with Mr. Golden through his email. Look for him on seekingalpha.com for his articles. Look for him on talkmarkets.com. Check his Twitter. Check his StockTwits account regularly. If you want to email him, do it before, before he's so famous that you won't be able to get in touch with him. No, I'm just kidding. You know what? He's very accessible and he responds very promptly.
I hope, one more, anybody who's in the path of Irma, I live in Florida. Most of my family lives in Florida. Really, please do, everything that you can to board up, get your supplies. Yeah. I'm in North Florida, so, I should be, relatively okay, but heaven forbid I'm the only person you can contact to get out of South Florida. Please do. I will never turn anybody away, regardless, what the situation is. I don't want anybody to, find their lives, completely sham or just injury. You hear about the deaths, You know, unfortunately, they don't show them on the TV because you can't during these storms, but get out of harm's way.
Absolutely. Stay safe, folks. All right. My guest has been, once again, Mr. Seth Golden from the Golden Capital Portfolio Management. Thank you, Seth, for coming by again on Looking at the Markets, and we'll see you the next time there's news, which will probably be very soon. Thank you, sir, once again.
Thank you so much, David. Everybody have a great day.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.